Well, students, welcome in part 3 of economic subject economics, class 10th SST. The chapter is money and credit. Children, in previous section, that is part 2nd, we had discussed how people used to take loan from various sources. And a shoemaker, he took loan and his loan or credit became fruitful to him, and another lady Swapna, her credit became painful. So children, there comes a condition of debt trap for Swapna. Swapna was involved in debt trap. Why? Because her recovery of loan became painful. She had to sell her permanent property, that is some piece of land, to repay the loan. So it was very painful because these permanent properties, they are earned after great difficulties from our forefathers. It is transferred and she had lost this portion, so it became painful. In many cases, this type of recovery became painful to the farmers whose crops collapse and they are unable to repay the loans. Even from government of India, they have taken loan, but government have some welfare programs and they are getting that facility. But still, if we take credit from money lenders or from other sources, then the recovery become painful. And this condition means the condition of borrower when he takes loans and he is unable to repay, means the recovery of loan become painful, then it is called debt trap. That is condition of borrower when recovery of loan becomes painful is debt trap. So children, we have got various things to avoid this condition. First, Government of India made arrangement of Grameen banks in rural sectors so that credits could be given to the needy people at very low interest, that is approx 4% per annum. That's why they are getting, and so that they can repay it easily. Even collapse crops are there, but still they could pay because of interest rate is very low. So children, this was the condition. Now we will discuss terms of credit. Children, in case of Reserve Bank of India have given special guidelines to every banks that they can pay loan to any borrower, but because recovery becomes painful and the condition to avoid the condition of debt trap, they have made a special arrangement of taking collateral. Children, collaterals are special, you can say, guarantee for the bank, in which the borrower can submit the paper of land, building, vehicles or livestock. These things, they are kept in bank as a collateral. So these collaterals, they are guarantee that borrower will repay the loan. So this condition is for government banks, and even some money lenders also use this condition. So children, you have understood the collateral. You can say collateral is a kind of guarantee to the bank that they will repay loan. Means they have to give some documentation, or they have to submit the papers of their permanent properties, so that if they fails to pay the loan, then government can recover their loans by selling these permanent properties and get their loan back. So children, this was the condition of collateral. Now we will discuss terms of credit. Children, when we are taking loan, credit means loan, means what are the terms and conditions. For taking loans, interest you have to pay. The borrower have to pay interest, and it is high interest. High interest means that is more than 12%. That's why these are the conditions that if you want loan such as home loan, vehicle loan, or loan for installing your factory, then you have to pay such huge interest. And second, you have to deposit collateral, means such type of land, building, vehicle, livestock, property in the bank. This is one more condition. And next condition is documentation. In documentation, you have to submit your various documents, your academic documents, or along with that your affidavits, along with that notary, and along with that various other pictures of that area for what you are taking loan, where you will use this money. So all these conditions are documentation. You have to fill up a form, and field officer will survey and he will submit the report. They are the documentation. And how will you make payment? That is mode of payment. They are terms of credit. Mode of repayment means whether you are going to pay the loan in particular fixed time period or in installments for 10 years, 5 years, whatever it is. This is called your mode of repayment. So children, these are the terms of credit. And now we are going to discuss various types of variety of credit arrangements. We are taking these variety of credit arrangements from village area. What are these credit arrangements? Let us take various cases. These cases comes from rural area, that is example of village. There is a man, Shyam Lal. He had 15 acres piece of land, and this man he had to take loan for manufacturing, not manufacturing, for raising crops. For that purpose he had taken loan from money lender. Credit means Shyam Lal took credit from money lender. To cultivate 15 acres piece of land at interest of 5% per month. Okay, note it. Shyam Lal took credit from money lender to cultivate 15 acres piece of land at 5% per month interest. Okay, so what will happen? He have to pay. Now he has to pay 60% interest in a year. Just imagine how much amount he is going to pay, because the term of credit is 5% per month from money lender. So what happened? Is Shyam Lal benefited? No. Shyam Lal has great loss, and if his crop collapse, then he will go in debt trap. In second case, there is another person who is Arun, who is supervised to work in a farm, and he has taken loan from bank. Arun has taken loan. Arun took loan from bank at 4% per annum. Okay, So these are credit arrangements. Shyamlal took loan from money lender at 5% per month, so he have to repay 60% interest in a year. But here Arun took loans from bank at 4% per annum, means in a year he have to pay 4%. So what will happen? This man Arun is benefited and he will get proper facility, means you can say that he have to pay very less amount as an interest, but Shyamlal have to pay 60% amount in a year. It is very difficult condition. So these are because of diversity in our country, and people, they are unaware that we should take credit from government banks, nationalized banks, and here our loan could be at low interest, but there is no proper arrangement in village area. There is no banks. Even many areas are there are banks at 5 kilometers or 10 kilometers. That's why Shyamlal suffered this. But Arun, he took loan from bank, from Grameen Bank. That's why he is benefited. In similar manner, there was another farmer. He also wanted loan from banks, but he had less awareness. He could not understand how banks provide loan and how they are getting loan, and he don't know terms and conditions. That's why he never approached a bank. He always took loan from money lenders. This became a painful condition for him because he had to pay high interest of rate. So children, it is compulsory that Reserve Bank of India, they should make arrangement, and they have done this arrangement. And Government of India have installed Grameen banks in rural areas so that these credits should be distributed to needy people, to those people who wants to establish something, some manufacturing work or some entrepreneurship work. If they wants to do some transport activities, dairy farming, for starting cottage industries. So for these purposes, they are given credit at low interest rate on the guidelines of Reserve Bank of India. And collateral is very simple, and along with this, rate of interest is very low from Grameen banks. And secondly, many people, they used to purchase capital, such as they wants to purchase livestock. For that they get they can get credit from these banks and purchase all these things. They can also perform insurance conditions, insurance activities for their livestock, for their farms, crops. Various welfare programs are running. So children, these economic activities, they are very fruitful if we are aware of, and Reserve Bank of India, they are providing credit at cheap rate and in rural areas with the help of Grameen banks. Okay children, thank you for watching this clip.